What would you make out of the earnings of Paytm, and what would your suggestion be on the stock?
No, I think Paytm has shown very strong number on the operational side. Although on the net profit side, there has been some one-off adjustment which has resulted in a loss. But I think if you look at the one-off adjustment and if you exclude it, then I think the numbers are much better than what the street was expecting. And I think whatever selling had to happen and whatever negatives were there are now properly built into the price. So my sense is that the fintech space could grow quite remarkably well in the next 6 to 12 months, and the second half should be much better for Paytm. I think investors who have a slightly medium to long term call, something like 12 to 18 months, can even look at buying the stock. But yes, I think one needs to understand that this is a slightly longer term kind of opportunity. Probably, even levels of 1500 plus are possible. Once the Q3 numbers are out, we see a better traction both on the top line and the EBITDA margins. I think you could see a lot of interest coming in from a lot of bigger kind of investors here. So structurally, we are positive, but for the longer term.
Structurally, you're positive, but for the longer term. Also, Paytm is one of the additions in the MSCI Index as well, and that's also going to be playing up as trigger today. You've already seen the stock up by about 3.5% in trade. But from the new age tech space, what's actually disappointed on the earnings is delivery. Again, after reporting, the Q2 loss and the leadership shake-up as well, the stock has also slipped by about 8%. Remember, this is the third-party logistics firm Delhivery. The shares have slipped by 8%. The company has reported a loss in the September quarter. This is even as the company has reported record shipment volumes ahead of the festive season, and therefore has also announced a key leadership transition in the finance team as well. Of course, we are going to be assessing this one as well. Avinashji, we were slowly and gradually hoping that Delhivery is also coming out of its long-drawn, underperformance that we had seen on the stock. For the last couple of years, the stock had done nothing for investors' portfolios, and slowly and gradually we had started to see some pickup happen. And then comes Q2 again with a loss and with a change on the management front as well. This is despite the record shipment. What exactly is the problem with Delhivery as of now, and how would you assess the stock?
No, I think my guess is that this stock definitely has been a little volatile in terms of earnings, as you rightly pointed out. See, the market does not like something which is inconsistent, so that definitely goes against the company and the stock. So, we prefer to understand, what is the real reason. I think they have a con call today. So we'll like to know what are the key reasons. But I think one thing is very clear, Sakshi, that within the logistics space, there was some slowdown in the quarter 2. Quarter 3, hopefully, with the GST cuts, there is a expectation that the volume growth could pick up, and that could obviously benefit the, logistic companies like Delhivery. But I think net, if you look at other companies like TCL Express or Transport Corporation of India, numbers have been much better. So I think this seems to be a company related issue. I don't think the entire sector is in any kind of a major problem. But we'll like to better wait and watch. I think fresh buying definitely not advisable. But I think investors who are holding the stock should at least wait for some clarity from the management. Hopefully, if this is just a one-off quarter, markets could definitely discount it. But I think if it's a structural issue, then I think there is something which we need to be worried about. But I think we'll prefer to hold. I think more updates, one will come to know once the con call is completed today.
If you like the video, do like, comment, share and subscribe.